Hey, what's up? Welcome to DGen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts like the chart behind me, which is of AMD, ticker symbol AMD. And here the market just closed. It looks like an AMD did close underneath the 382 at a price of $161.32. So I am under the impression that AMD will be going down following their earnings report, which I imagine will be coming out pretty soon. And then their earnings call will be going on about an hour from now. I will be streaming that, and so that should be pretty interesting. And yeah, I am thinking that, this is a topping signal that we are going to see a pullback just like we saw over here, bumping into the 236, pulling back down to the 382. Now, I think that we will be pulling back down to the 50% level, if not lower. But, maybe I'm wrong. Who knows? This is going to be an interesting one to watch. So, I'm looking forward to that. And yeah, it does look like it is going up in the after hours. I'm just going to put on the 1 minute time scale here. We can see that it has gone up. And also do want to note that SMCI Supermicro Computer is also reporting earnings in the after hours, but they are not up as much as AMD. So, we're just going to have to see what happens with this. And yeah, so, it should be pretty interesting. Looks like it did hit a high on the first minute after the market has closed at a price of $160.75, but looking like that might be a top as it's pulling back a little bit, but maybe that's just some consolidation before a move higher. We will have to see. Yeah, and then I do have these other tickers here. Also got NVIDIA as well as SMH and SOXX. These are both semiconductor ETFs. And then I also do have SOXS, which is the semiconductor short ETF, and that is actually the one that I have a position in. But I'm not necessarily rooting for semiconductors or AMD to be going down because I'd be happy to pick up some more shares of SOXS at a discount. And, so I'm happy to see whatever happens here. And yeah, so that's pretty cool. And seeing this coming down, and I'm going to try and see, I think that we should be seeing some little news things pop up here when they do release their earnings. I can also be going over to their website to see if there's stuff popping up on that. So I will do that. But yeah, their earnings call is going to be coming out in less than an hour now. So, I will be streaming that. But let's see. I just need to pull up AMD Investor Relations. Let's see, press releases. And so I've got this kind of on my screen. You can see back here, but, not to disrupt the visualization of what's going on in the markets, not to disrupt those candles. But yeah, I don't see anything on their website just yet. So, and I'm just going to do some stuff in YouTube Studio as I am still, kind of experimenting with live streaming and stuff. And so, yeah. But anyways, I'm just going to have that on in the background as I experiment with that. But yeah, it looks like pretty volatile as we would expect. But yeah, this closed below this level, the 382 at $161.32. I don't think that looks too good. But, maybe I'm wrong. Maybe it goes higher. Let's see. Yeah, maybe this is a bull flag. All right. Yeah. All right, I am actually messing around in YouTube Studio because I'm experimenting with something that I thought I could be doing via OBS, but it doesn't look like I am able to. And so I am going to do something right now, just kind of an experiment. And, maybe, I think maybe an ad just got inserted. It's kind of an experiment for me, so please excuse that. But yeah, it looks like it's coming down a little bit. I'm kind of disappointed in, oh, I see it here. Cool, there's a little button for me to insert ad, so I can do that whenever there's a dull moment during the stream, whatever. So that's cool. It's good for me to know. And then I don't have to have awkward little ad insert things. I can do that more eloquently. Practice makes perfect. But yeah, here looks like it's fighting to stay up with his big wick down to 159.25. But yeah, we'll see. When are the earnings coming out? We will have to see. Cool. Cool. All right. Still can't, it needs to be getting above this white line is how I view it. So hopefully that happens. And yeah, AMD up 1%, but look at SMCI, that's up over 8% in the after hours. Check that out. So I wonder if this is a reflection of what might be happening with AMD. So we'll have to see about that. Yep, this looks like it's going up now. Still less than 2%, 1.65%. Let's see some minute closes above the 382 here, this white line. And hopefully it sustains that, but it's going to be so volatile the next few hours, I'm sure, into market open tomorrow. So yeah, SMCI now up about 8.5%. NVIDIA just up less than 2%, but still more than AMD. Yeah. All right, what's going on here? NVIDIA is now up over 2%. SMCI is pulling back a little bit. Yeah, this is SMCI. Back to AMD. All the charts are probably going to look pretty similar. Yeah, so we'll have to see. Wow, SMCI is trading at $858. It's crazy. All right, let's get some news on this. $159.68 seems like an important level. That was the open of this candle. Let's see some news coming out on their earnings. Might actually check over. Ooh, yeah. And CD drive. I should probably add Amazon up here as well. We can just keep an eye on it in the sidebar over here. But yeah, I know it's not a semiconductor, but up 4.5% right now, so that's pretty good. Yeah, I'm short semiconductors, but I'm not like looking to. I don't think that like whatever happens over the next couple of days doesn't really affect me. I'm short for the longer term. But yeah, Amazon, I can flip over to their chart. I might switch over to the daily just to kind of get a better idea. Yeah, maybe the weekly is actually better. Yeah, let's see here. This did get a higher high here, and actually the higher high and the RSI is higher than it was over here with these highs. So there's no bearish divergence there unless you're looking at this high. But there are these higher highs, so I don't think that really counts. So yeah, higher highs in the price, higher highs in the RSI, no divergence. Yeah, switching back to AMD, going to the 1 minute time scale again, zooming in. All right, yeah, just kind of fading here. I think it's just like moved up in anticipation, waiting for the release. Algorithms are going to push it, one way or the other, probably back and forth, and over the next hour, really. And then we'll have to listen to the call. And yeah, I mean, I feel like things are probably going to be, looking good for the company, looking good for semiconductors, but it's just, they can only go up so much, and they've gone up so much already. So yeah, not sure what's going on. All right, SMCI is now down about 4%. So you can see that, wow, they lost all their gains from earlier in the after hours session, whereas AMD is still up relative to its close, just by a little bit. NVIDIA is more or less flat. Of course, they're not reporting earnings. Semiconductor ETFs are down a little bit, whereas SOXS, which is short, is up. But all of that can change, all of that can change very, very soon. Whenever we do get a release of the earnings. And I'm checking their website, just refreshing it now to see if the most recent update was April 16th. I'm looking for all press releases, financial press releases. January 30th. Oops. It is April. So, yeah. I'm getting a little bit of a bounce here. I'm very curious to listen to their earnings calls because I really don't know too much about the semiconductor sector, and microchips, microprocessors. So yeah, with AI and stuff, it's going to be volatile. Whatever we see, whatever it opens at tomorrow, we're going to see a volatile after hours session, I'm sure. And AMD is, doing much better than SMCI, down 4.5% over there. AMD is up, plus or minus 0.5. I guess 0.5 plus or minus 0.5%. Yeah. Let's see if we get some news. Should be getting some soon. All right. What is going on? Is AMD Advanced Micro Devices a buy ahead of Q1 earnings announcement? Guess I'm kind of curious to see what they have to say. But I was hoping that'd be a pop-up in Webull, and that is not what it is. So. Oh, looks like it's coming down. I don't know where I can put this that's not in the way. I'm actually just going to close that. Maybe if the chart gets less dynamic, maybe we can read that and check out their press release. And I could actually, the way that I have it situated, I could probably just read their press release, their earnings release when it does come out as we watch the chart, so I don't have to obstruct the view with it. April 30th. Oh, yep. So that's for their live stream of their conference call. April 16th is still the most up-to-date press release that I see on their website. So And if anybody is playing Amazon, they're up about 3.5, almost 3.5% in the after hours. So looking better than semiconductors right now, but and I guess I might switch over to Amazon real quick. Still no earnings release for them, but big move up, move to the side. I'll switch this over to 10-minute time frame. Yes, this is going back to lows from was this last Friday? Yeah. So, yep. Taking out those lows. Switch back to the 1-minute time frame. 151.51 is the low in the after hours. Still, though, I'm thinking that this 50% retracement, $140.94, maybe it gets there, but maybe that's longer term, or maybe it doesn't go back to that level. I just like to use the fibs just to get an idea of what's going on. Makes analysis a little bit easier. I wish I could look at like 30-second or something like that. Get a little bit more dynamics on the chart. But yeah, not looking too great. SMCI down. AMD is actually, they're down about the same, about 3%. SMCI. NVIDIA is down about 0.5%. SOXS is up 2%. But, this could all change when their earnings are released. This could all, completely reverse. And when the call comes out, could reverse again. So, I'm not actively trading this. I'm just holding some SOXS, which I would like to add more to my position. And actually, that is one thing that I should probably check. Let's see. Yeah, I just want to, if in case SOXS does dip, maybe there's volatility in semiconductors to the upside. Yeah, if you guys do enjoy this, make sure you like it. And I recently learned how to put ads in live streams, so I'll probably be putting ads periodically, but not right now when all this dynamics are going on. Damn, now in the 149.22 is the low. Yeah, so quite possible that and since I did mention, thanks Big Mo. I hope you're doing well. I hope you liked the Polestar video. I'm feeling better about the chart with that one, but I didn't see what it closed at, so that's always important. But yeah, I'm just going to throw up like and subscribe if you do enjoy live streams. If you do enjoy the videos I put out, make sure you like them. Always share your thoughts, whether in the comments or the live chat. Happy to get your feedback, and also make sure you subscribe. I try to host live streams of earnings calls whenever I can, and then do Sunday night ticker request live at 9 p.m. Eastern. So those are always fun. And just try to put out as many videos as I can around work schedule and, dealing with life. I was just weeding the garden earlier, which I hate weeding so much, but that's what I was doing earlier. It's not very fun, but I should have some tomatoes, eggplant, and bell peppers, so I'm excited about that. But yeah, maybe there's a bottom that was found here around 150. That would kind of make sense. But I am gonna see if I can. Let's see. I think I need to cancel a couple orders to let's see, to be able to place a buy on SOXS if there is a pullback, which I suspect there will not be, but you never know around earnings. So let's see. Okay. And all right, is that from my little weekend analysis, I feel like SOXS is a good buy at 33.11. I'm not really sure how I picked out that number, but the chart looked good to me, and so I'm going to add to my position. If it dips that low, which is just a small addition, I'm a little fish, but, doing what I can. Yeah, and I wonder if this is a bear flag. I'm not like super bearish or anything. Not relative to earnings. It doesn't really matter to me what happens overnight. But yeah, with these down moves and then consolidation, wondering, and this is actually like a falling three methods potentially, and actually this, you have a big red candle and then three candles that kind of stair step back up. That if there is a red candle in this next minute that comes down, that would then be a falling three methods, and that is a bearish pattern. And so we'll have to see. It's like that pattern hasn't played out because you need to see this red candle over here, but that could definitely be what we're seeing. I do not typically look at charts on the 1 minute time scale other than, when doing earnings calls, really. And so, we'll have to see what happens with this candle. It seems like it'd have to get a flush down pretty big, pretty rapid. We're not seeing that. And I'm curious, why is it always falling 3? Why can't it be falling 4 or 5? And I'm sure that those are things as well. So we'll have to see if we do get a flush down, or if this is, if this gets a close above this candle's high, which was basically 155. We see a close for a minute candle at 155. Maybe that'd be going up more. But let's see. Amazon now less than 3% up in the after hours, about 2.77%. Maybe this is rolling over. Can't get above the candle here from that minute. 6 minutes ago. Okay, earnings per share of 62 cents beat 61 cents estimate. Sales of 5.47 billion beat, which was 5.459 billion estimate. And so, it looks like they're doing good. But, somebody commented on, like I have a short position on semiconductors. That's not really going to dictate, what I see in the chart. Long term, I think that semiconductors will be going down, but around earnings, I think they could still rally. And so, but at the same time, if fundamentals are good, if fundamentals are strong, that doesn't necessarily mean that prices going up that could already be priced in. And we have seen semiconductors, AMD, NVIDIA, SMCI, all rallying a bunch over the past year. And, that it might already be priced in. And WS, yes, I have noticed cannabis stocks ran pretty good today. I think 40% up for Tilray, something like that. That's the only one that I hold. And actually it dipped to a price that I had a limit buy at, but it didn't get filled, and then it took off. So kind of disappointing, but, it wasn't a big buy order. Always just trying to average down on dips. And, on rips, hold and or trim. Haven't trimmed any cannabis because I've noticed that it tends to run. And there's a gap fill on Tilray that has not yet been filled, unless it has in the last few minutes of trading. But yeah, I will flip over to, other stocks towards the end, or if this does seem to calm down, maybe I can add Tilray here. And we can just see it on there, down 5% after hours. But let's see. I'm just going to do a quick flip over to Tilray. Did go up about 40%. And then now it's pulling back a little bit. Healthy correction, though. So no big deal. When something goes up a lot, good to see a pullback, especially in the after hours that might be shaking people out. And that could be an opportunity to add. I feel like whatever happens in after hours is opposite of what ends up happening when the market does open. kind of a way to shake people out or for people get people to FOMO in. And what we're seeing now, and I can actually I might just read their earnings report. I'm going to check their website and see what their earning report says. So I can read this to you guys if you want while we check out the chart. And so, yeah, their earnings call is in about 35 minutes. And so I will just read their report here, which, let's see. Yeah, so this just came out at, I guess, is it 4:15 Eastern, so about 10 minutes ago. So let's see. AMD today announced revenue for the first quarter of 2024 of $5.5 billion, gross margin of 47%, with an operating income of $36 million, net income of $123 million, and diluted earnings per share of 7 cents. On a non-GAAP basis, gross margin was 52%, operating income was $1.1 billion, net income was $1 billion, and diluted earnings per share was 62 cents. And all of that beat estimates as far as I understand, so looking pretty good. And then if I do read this quote that is from the AMD chair and CEO, Dr. Lisa Su, she says that we delivered strong first quarter results with our data center and client segments, each growing more than 80% year over year, driven by the ramp of MI300 AI accelerator shipments and the adoption of our Ryzen and EPYC processors. This is an incredibly exciting time for the industry as widespread deployment of AI is driving demand for significantly more compute across a broad range of markets. We are executing very well as we ramp our data center business and enable AI capabilities across our product portfolio. She continues, actually, no, this is from the EVP, Executive Vice President and CFO and Treasurer, Jean Hu. AMD started the year strong, delivering record quarterly data center segment revenue. In addition, we drove solid gross margin expansion. Moving forward, we are well positioned to continue driving revenue growth and margin improvement while investing in the large AI opportunities ahead. So generally, company's looking really good, good quarter, and overall just, beating estimates. And so I can read more of that if you guys would like, but I will probably flip back to the chart. So I'm looking at that. And let's see. Yeah, still down following after hours about 4%, but did regain some of that loss. And, what's nice about this is, this is a down move, and we're seeing consolidation, but this consolidation is actually following this up move. So maybe this is a bull flag that we're looking at. However, this could be a double top here, and maybe we do get a rejection, but, we'll have to see. I mean, it's just going to be volatile no matter what. And, one thing I might do just as kind of an experiment, just 1 second for an ad. We'll see how this goes. And so if there was an ad that popped up, hopefully that wasn't too disruptive, not too much happened in the chart. But, I've been streaming for months, and each stream I get like 10 cents from, and that's because ads haven't been utilized. So just kind of experimenting with that. If that is super annoying, let me know. But that's just kind of, trying to make ends meet with the channel growing and stuff. But yeah, this does look like it might be a double top here. Wicks up. We'll see where the close is for this candle. But let's see, how much time do we got left on that minute? About 20 seconds. So yeah, that does look like it might be a double top. Minute time scale, kind of crazy. But, it also could, find support here right around 153, 152. 152 would probably be breaking a little bit lower, but 152.5 right around here, that could be support, maybe get a double bottom. Yeah, double top is, it's like you can think of it as like this big wick up that's here. There's no buying pressure when it gets to these levels. There's no continuation up. It's just people trimming as it goes higher, and so it can't hold those levels. And then you get a double top. It's just like a retest of that. If it gets rejected, that's like, okay, there were 2 tries at that level. There are no buyers up there. It's going down. And then you basically kind of exhaust any buyers that are up at these levels, and people are just selling when it goes up that high, and buyers fade away, and then price comes down. But what's interesting about this is you got these big wicks up here with kind of the candles going up to like 153.80, but here the candles go up to like 154.50, and so it did push the closes of those candles higher, but still couldn't hold. But we are seeing with this, the high on this minute was 154.99. Here this candle 154.88. So yeah, it's crazy. It's 11-cent difference, but they do look pretty close. So that is a lower high. And with that being said, lower high in the price here, we do have higher high in the RSI. Even on the 1-minute time scale, that is bearish divergence, and that did suggest, give an indication that there would be a down move here. But really, it's never just one indicator or one pattern. If there are multiple that stack up, like double top, and then, seeing a lower high, and then with the RSI, another indicator, a higher high, bearish divergence, you get this coming down. And yeah, I think, okay, volume will be a little bit more useful if I include the market hours over here. Volume's just flat and low, but now we can utilize that a little bit better as an indicator with volume here being adjusted for after hours trading. And so here, after this down move here, we do see volume go up. And so when you do see price going down with volume going up, that is an indication. Whenever there's divergence in price versus volume, price action versus volume, that is an indication that price will be going down, as far as I understand. But then we do see, moves up after that. My analysis of volume something I need to be working on. So did see a bounce here. And so maybe that's, down move, and then volume comes down here. Then that starts to go up, it starts to rally. And, like a double top here, there's basically a double bottom here. So it does seem like it's just kind of consolidating in. Let's see if I connect there. And I'm going to fade out those white lines. I just don't like them. Man, I was doing some gardening, some weeding, and there were a bunch of ants. So I'm paranoid that I got ants on my ankles or something. Let's see. Yep, so it's quite possible this is a bull flag, up moves followed by this consolidation. So yeah, we'll have to see. As far as the earnings go, you would think the price would be going up, but it could be priced in, so got to factor that in. Let's see. Yeah, and this channel will be adjusting, as the price moves. So we'll see if that channel looks like it adjusts too much. Then, the pattern's changed, and I can readjust that channel to end at a specific time. But right now, I've extended it. Let's see. Over to here. So it should be following that price action. But yeah, 152.30 or so. And let's see, I could probably, maybe so it's a little bit easier to see. I might see if I can add the indicators, or what the price is. Let's see. Okay, yeah, so hopefully that's a little bit clearer for you guys to see. Hopefully it's not too small, but it's definitely bigger than, what is over here. It's 152.15, so that will be moving. And it also includes the seconds. Cool. I think, is that... I'm not sure what that is. Seconds. Yep, that's seconds remaining on the minute. So it's counting down for when the candle closes. That's pretty cool. But yeah, it does look like, had a double top up here. Now it looks like we got a double bottom. Did fake out break below it. But if this current candle's moving up, that could be reclaiming that level. Not looking too bad. And, on the note of reclaiming, it looks like Tilray was, down about 5%. Actually, it was a second ago, 15 seconds ago, was down 2% in the after hours, but now it's back down about 4%. So that one's looking to be volatile as well. AMD earnings, the quarter could be tough, but the AI future, it looks bright. So maybe there's some guidance or some forecast that suggests that this upcoming quarter might be a little tough, but longer term, things are looking good. So yeah, and if there is a pullback in the semiconductor sector, I would imagine that will eventually present a great dip buying opportunity for a continuation to the upside, because AI is everywhere now. And whether it's AMD, NVIDIA, SMCI, whatever, semiconductor stocks or microchip stocks, they're going to be doing well. Companies will be doing well. Stocks, it's like Jeff Bezos has the quote of saying, the stock is not the company is not the stock. And so things might be looking great for the company, but you can get things moving down. And so Amazon, following a very big move down, following the .com bubble, that was a great dip buying opportunity. And so AMD, any of these semiconductor stocks, the fundamentals are there. Any pullbacks, great dip buying opportunity for the long term. So, we'll see. We shall see. But right now, downtrending consolidation, potentially to break out to the upside. It's tough to know what's going to happen, because somebody says something and price is going to go up or down. So yeah, 152 right around there. Being down about 4% in the after hours, whereas SMCI also down about 4%. NVIDIA just down about 0.5%. Amazon up about 2.6% in the after hours, and Tilray down about 4.5%. And so WS made some good plays with NVIDIA and SMCI, but I think the market needs to catch up. I also played MU out of those now. Yeah, MU is, maybe I should add that up here. I think I did have a put on MU. Didn't really know too much about what I was doing. It was just a level that was pointed out to me. And it's like, oh, I'll see what happens. They are down 1.3% in the after hours. But yeah, I'm feeling like, especially with the FOMC meeting tomorrow, and I guess like jobs numbers coming out on Friday, I'm not exactly sure. But I just feel like everything's pretty precarious right now. So good to not be too aggressive, whether, to the upside or the downside, because any pullbacks that we see, it's likely going to be stair-stepping down if there's to be a market correction, whatever sector that is, or if that's the market as a whole. I am also have been building a short position using ticker symbol SH, which is not leveraged, and that's short the S&P 500. I did have a short position on SPXU, which is leveraged, I think 2x, it might be 3x, but that they had a reverse split, and my shares were returned to me. I didn't have I had a very small position, and then also let's see, SQQQ. I do have a position in that, and yeah, I will probably hold the SQQQ position longer. If I get to break even with SH, I'm probably going to shift that over to SQQQ to get that average down. But yeah, and did sell out of SoFi and luckily got into the cannabis sector. Hopefully tomorrow will be okay. Yeah, and I'm curious. Yeah, I made the call or pointed out a number of bearish signs with SoFi. I'm not always right with my calls, but when a number of things stack up, it's like one level, one indication, one pattern. That's the odds are not in your favor. But then when you see a number of things lining up, does suggest further downside or upside, whatever the pattern is, bearish or bullish. And so, yes, SoFi closed today at a price of $6.78. People were trashing me, telling me, you're crazy. SoFi is not going to $7 or $6. I think it's going to $6 because there's a gap there at 605 or right around 605. May not get filled, but I do feel like there's going to be a correction. And I might just flip over to that real quick. This is 676, so not down much. If I flip over to the daily time frame, yeah, I pointed out this head and shoulders pattern, suggesting that there will be a measured move, based from the head to the neckline here, coming down to fill this gap basically at 605. We can see that gap goes back in time to over here. So yeah, I'm compelled by that. I don't have a position in SoFi. And I don't have a position in AMD, but that doesn't mean I'm not interested to follow these stocks and see what's going on. But like I said, I do have a position in SOXS, which is short semiconductor sector. So, and that is, up 3% in the after hours, largely because of these pullbacks from earnings. Let's see, AMD is doing better though than SMCI, which is down 4%. AMD is now down about 3% in the after hours, testing the top of this consolidation channel that we're seeing here. Hey Ben, what's up? Hopefully the video that I put out comparing Rivian and Blink was useful. That generally I feel like my sentiment is kind of bearish. I'm just trying to be cautious right now, and some bearish patterns there, but maybe they're breaking out. So might be, the great time to dip buy. And like last week I put out a video on NEO. I need to do a follow-up on that, probably put that out tonight. And, I was starting to say, hey, might be going down lower, and had been saying, for weeks, it's a sale, dip buying opportunity. And then finally I put out a video, just in case I'm wrong, there are these levels to the downside it might be going to. That video wasn't terribly popular, and we started to rally following, basically over the past week. I wonder if we're going to be testing, $10 or sorry, $5 a share. I might pull NEO up, not to look at, but just to have it on the side here. Yeah, 472 down a little bit in the after hours, but yeah, that could be reclaiming $5. And so I will be putting out a video on NEO this evening. Those videos are always good performers, and I like the stock, so gotta do it. And yeah. And as far as things being good performers, check this out. Maybe breaking out or maybe getting rejected again. Maybe that's a triple top. So we'll have to see. Pretty precarious here. And got about 15 minutes before the earnings call. So I'm just going to plug my headphones into the computer. Oops, sorry, I bumped the mic. And so I can listen to the earnings call when that does go on. Yeah, I think that NEO's looking pretty good. And really just Alibaba has rallied. I don't know what it's done the past couple of days, but on Sunday I did look over that during the live stream. And yeah, I think that, and also I wonder if it could be rallying on basically, Tesla's gone up a lot because Elon Musk went to uh, China and negotiated terms on like full self-driving or something there, and that was a success. And maybe just sentiment around Chinese stocks is better right now, so that could be looking good. So yeah, yeah, testing this upper side here. So yeah, and I might just pull this out so it continues to follow the current price action. Pretty cool how it does that. Yeah, let's see. Yeah, and also like looking at the RSI here, what is going to be the high here? We are getting higher highs in the RSI, but this high was lower, or this high was lower than this one. And so, maybe I do want to do a array based on these highs. No, let's see. What was the high at this minute? 154.88. So let's see if I can get that to the penny. There we go. And the other one is 154.99. 54.99. So that is to the penny. This, if we are not to get a higher high than this, which was 154.60, that being lower than this high, that is lower lows in the stock price, lower highs in the stock price, and we are seeing higher highs in the RSI. That's actually not bearish divergence, that's hidden bearish divergence. Bearish divergence would be higher highs in the price, lower highs in the RSI. We're seeing the opposite of that. That is still bearish, but it's just hidden bearish divergence. But not to say that's going to play out. But, I would think that this is a bull flag following this move up here, consolidation. Haven't been able to break out, so that does make me think it is a little bit bearish. But fake outs happen all the time. I'm never right all the time. And, we're going to have to see. The candle closes in like 1 second. New candle. All right. That's pretty cool. All right. And since that does look like a top, it might be pulling back a little bit. I might throw up, an ad just while we wait. And hopefully that's not annoying. And so hopefully you skip that if you were able to. But yeah, nothing too crazy going on with the price action. We do have about 13 minutes before the earnings call starts. And that means I can probably tune into it. And so let's see, I will do that. I'll probably be listening to some music, but I will silence that from you guys because I will get a copyright strike if there is music that's happened before, or almost happened before. It was a copyright warning from a Coinbase earnings call. But yeah, well, actually, I am, yeah, I called that based on technical analysis. People say charting is, a waste of time. I think it's pretty valuable. I think it's pretty cool. It's, to me, it's not necessarily chart of price action. It's a chart of emotion and exploiting emotion and psychology. And so I just find it really interesting because I find myself having to battle with my emotions when trading. It's like I'm feeling nervous. No, that's good. Bye. Stuff like that. But yeah, I'm going to click over to their webcast and should be muted for you guys. But yeah, it's live. Some elevator, some piano music. It's too calm. So you guys should be happy you don't have to listen to it. One of 252, that's awesome. Blink closed above yesterday's close of 252. So I think that's looking good. Like I think the bottom's probably in for that, but the kind of precarious thing is that earnings are coming up. And like what we're seeing with AMD, earnings can be pretty volatile. I will pull up Blink here just so we can see what price it closed at, but I'm going to leave it on the AMD chart. 253. So it's kind of a weak close above it. And actually, what was, I might flip over to it. I'm going to switch over to the daily and switch over to Blink real quick. The one issue, though, is yesterday's high was 254. And so that is how you get a confirmation of close above the high. And so that's the one thing that's not so great about this. You want to see a close above that high. Today's close was 250, or high was 256. So that's really the level to be getting above. And here, yeah, this does look like, I'm going to adjust that. Down move followed by consolidation over here. That does look like a bear flag. So this could be not looking so good with 10 minutes to go before the earnings call. The relative strength of Blink today was actually good. Well, that's great. That's good to hear. Yeah, so I'm it's like I have learned, this is basically Gareth Soloway's rule or understanding of confirmation. If you get a high above, if you get a close above a level and you want to see it continue higher, you need to then see not only a secondary close above that level, but a close above that high that broke the level and closed above it. So there is still potential that there's not confirmation with Blink. So still precarious, but it's still, it did close higher than yesterday's high, so it's leaning more good. But like whether confirmation is a guarantee, I don't think you can think of it like that. But yeah, and this potentially, I was saying a double bottom over here, or maybe relative to this, but right now, double bottom with current price right around $152, probably getting a bounce to move up. And so would be cool if it could break out above this downtrend, when the earnings come out. So, yeah. So let's see what's going on. AMD down about, whoa. Yeah, and that's kind of, if I move this to over here, is that then going to get a close below that? I like seeing the channel wiggle. But yeah, I mean, you can see that it's expanding and it's pushing it. And so maybe this, yeah, but there's a wick down, so maybe it's a fake out. Down about 4.5% in the after hours, whereas SMCI is down about 7.5%, over 7.5% in the after hours. Nvidia down 1%. MU, not MCU, is down about 1.4%. And yeah. And so I might post a little Twitter ad for this stream. I'm just going to do that on my phone. Actually, what is the better way to do that? I think I can do it from my computer just fine. So let's see. Still testing. Still in that channel. Let's see. All right, got about 5 minutes before their call starts. And when I started this stream, my stomach was rumbling a little bit. I might actually go grab some popcorn, so I will be right back in a minute. But I'll just leave the chart up here so you guys can enjoy that while I'm gone. But be right back in a second. What did I miss? Well, I know it's not AMD. I've got some AMC popcorn. So, just one letter off. And I might wait for the stream to start before I munch on those. So you don't hear the crunches. Because I will mute myself so we can just listen to their call. But yeah, look at this. I would say that has broken below, but you know, if we extend this line out, it's gotten one close below. We need to see another close below this low, and then that would be confirmation. And so let's see, we got about 25 seconds left on the minute. And so if we do get a close below this low, as far as my understanding goes, that would then be confirmation because you have one close below the level and then a secondary close below that level, below that previous candle's low would then be confirmation. Looks like we've got 5 seconds left. There's no confirmation. I think the bottom's in there. It's going to go up now. And that is also, that candle got, yep, that's a bottoming wick, bottoming tail, closing in the upper quarter of that trading. And so that big wick down, but you know, maybe it's negated on the next candle, you know, so we'll have to see. But really, I feel like this channel kind of began to diverge there because you got the support here, and then it's just been, yeah. So maybe the confirmation, maybe this candle was the confirmation of the break of this channel, if there's any significance to it. You know, it's all you know, relative to where you know you're drawing the lines. About just about let's see, with this minute ending in 2 seconds, we've got just about 1 more minute before the earnings call starts. Price does look like it's fading, being down about 5% in the after hours, whereas SMCI is down about 8%, Nvidia down 1.5, MU down about 1.3 in the after hours, and Amazon up 2.5%. And let's see, Tilray down 3.6%. SoFi down about 1% in the after hours. NEO down about 1% in the after hours. Blink down 0.79% in the after hours. But yeah, I feel like after hours pricing, other than, you know, around earnings and stuff, is kind of just noise. You want to see what the closes are, what the opens and closes are. And so let's see, let's get this started here in 1 second. I'm still just listening to the piano, but I'm going to refresh the page just in case there's an issue. Still just piano, just refreshed it. So let's see, they should be starting any minute or any second now. But yeah. And so now I would think that if this moves up higher, this approximate level would then be resistance, a level to break above volume profile. Oh, it's starting, so I'm going to turn this off.
Are in a listen-only mode.
Hopefully you guys enjoy. I will share my thoughts at the end. Hope you enjoy.
Assistance during the conference, please press star 0 on your telephone keypad. As a reminder, this conference is being recorded. It is now my pleasure to introduce your host, Mitch Hawes, Vice President, Investor Relations. Thank you, Mitch. You may begin.
Thank you and welcome to AMD's first quarter 2024 financial results conference call. By now, you should have had the opportunity to review a copy of our earnings press release and the accompanying slides. If you have not had the chance to review these materials, they can be found on the Investor Relations page of AMD.com. We will refer primarily to non-GAAP financial measures during today's call, and the full non-GAAP to GAAP reconciliations are available in today's press release and the slides posted on our website. Participants on today's call are Dr. Lisa Su, our Chair and Chief Executive Officer, and Jean Hu, our Executive Vice President, Chief Financial Officer, and Treasurer. This is a live call and will be replayed via webcast on our website. Before we begin, I would like to note that Mark Papermaster, Executive Vice President and Chief Technology Officer, will attend the TD Cowen Technology, Media, and Telecom Conference on May 29th. And Jean Hu, Executive Vice President, Chief Financial Officer, and Treasurer, will attend the JP Morgan Global Media and Communications Conference on Tuesday, May 21st, the Bank of America Global Technology Conference on Wednesday, June 5th, and the Jefferies NASDAQ Investor Conference on Tuesday, June 11th. Today's discussion contains forward-looking statements based on current beliefs, assumptions, and expectations. Speak only as of today, and as such, involve risks and uncertainties that could cause actual results to differ materially from our current expectations. Please refer to the cautionary statement in our press release for more information on the factors that could cause actual results to differ materially. With that, I will hand the call over to Lisa.
Thank you, Mitch, and good afternoon to all those listening today. This is an incredibly exciting time for the industry as the widespread deployment of AI is driving demand for significantly more compute across a broad range of markets. Under this backdrop, we are executing very well as we ramp our data center business and enable AI capabilities across our product portfolio. Looking at the first quarter, revenue increased to $5.5 billion. We expanded gross margin by more than 2 percentage points and increased profitability as data center and client segment sales each grew by more than 80% year over year. Data center segment revenue grew 80% year over year and 2% sequentially to a record $2.3 billion. The substantial year-over-year growth was driven by the strong ramp of AMD Instinct MI300X GPU shipments and a double-digit percentage increase in server CPU sales. We believe we gained server CPU revenue share in the seasonally down first quarter, led by growth in enterprise adoption and expanded cloud deployments. In cloud, while the overall demand environment remained mixed, hyperscalers continued adopting 4th-gen EPYC processors to power more of their internal workloads and public instances. There are now nearly 900 AMD-powered public instances available globally as Amazon, Microsoft, and Google all increased their 4th-gen EPYC processor offerings with new instances and regional deployments. In the enterprise, we have seen signs of improving demand as CIOs need to add more general-purpose and AI compute capacity while maintaining the physical footprint and power needs of their current infrastructure. This scenario aligns perfectly with the value proposition of our EPYC processors. Given our high core count and energy efficiency, we can deliver the same amount of compute with 45% fewer servers compared to the competition, cutting initial CapEx by up to half and lowering annual OpEx by more than 40%. As a result, enterprise adoption of EPYC CPUs is accelerating, highlighted by deployments with large enterprises including American Airlines, DBS, Emirates Bank, Shell, and STMicro. We're also building momentum with AMD-powered solutions powering the most popular ERP and database applications. As one example, the latest generation of Oracle Exadata, the leading database solution used by 76 of the Fortune 100, is now powered exclusively by 4th-gen EPYC processors. Looking ahead, we're very excited about our next-gen Turin family of EPYC processors featuring our Zen 5 core. We're widely sampling Turin, and the silicon is looking great. In the cloud, the significant performance and efficiency increases of Turin position us well to capture an even larger share of both first and third-party workloads. In addition, there are 30% more Turin platforms in development from our server partners compared to fourth-gen EPYC platforms, increasing our enterprise SAM with new solutions optimized for additional workloads. Turin remains on track to launch later this year. Turning to our broader data center portfolio, we delivered our second straight quarter of record data center GPU revenue as MI300 became the fastest ramping product in AMD history, passing $1 billion in total sales in less than 2 quarters. In cloud, MI300X production deployments expanded at Microsoft, Meta, and Oracle to power generative AI training and inferencing for both internal workloads and a broad set of public offerings. For the enterprise, we're working very closely with Dell, HPE, Lenovo, Supermicro, and others as multiple MI300X platforms enter volume production this quarter. In addition, we have more than 100 enterprise and AI customers actively developing or deploying MI300X. On the AI software front, we made excellent progress adding upstream support for AMD hardware in the OpenAI Triton compiler, making it even easier to develop highly performant AI software for AMD platforms. We also released a major update to our ROCm software stack that expands support for open source libraries, including vLLM and frameworks including JAX, adds new features like video decode, and significantly increases generative AI performance by integrating advanced attention algorithm support for sparsity and FP8. Our partners are seeing very strong performance in their AI workloads. As we jointly optimize for their models, MI300X GPUs are delivering leadership inferencing performance and substantial TCO advantages compared to H100. For instance, several of our partners are seeing significant increases in tokens per second when running their flagship LLMs on MI300X compared to H100. We're also continuing to enable the broad ecosystem required to power the next generation of AI systems, including as a founding member of the Ultra Ethernet Consortium, working to optimize the widely adopted Ethernet protocol to run AI workloads at data center scale. MI300 demand continues to strengthen, and based on our expanding customer engagements, we now expect data center GPU revenue to exceed $4 billion in 2024, up from the $3.5 billion we guided in January. Longer term, we are increasingly working closer with our cloud and enterprise customers as we expand and accelerate our AI hardware and software roadmaps and grow our data center GPU footprint. Turning to our client segment, revenue was $1.4 billion, an increase of 85% year over year, driven by strong demand for our latest generation Ryzen mobile and desktop processors with OEMs and in the channel. Client segment revenue declined 6% sequentially. We saw strong demand for our latest generation Ryzen processors in the first quarter. Ryzen desktop CPU sales grew by a strong double-digit percentage year over year, and Ryzen mobile CPU sales nearly doubled year over year as new Ryzen 8040 notebook designs from Acer, ASUS, HP, Lenovo, and others ramped. We expanded our portfolio of leadership enterprise PC offerings with the launch of our Ryzen Pro 8000 processors earlier this month. Ryzen Pro 8040 mobile CPUs deliver industry-leading performance and battery life for commercial notebooks. And our Ryzen Pro 8000 series desktop CPUs are the first processor to offer dedicated on-chip AI accelerators in commercial desktop PCs. We see clear opportunities to gain additional commercial PC share based on the performance and efficiency advantages of our Ryzen Pro portfolio and an expanded set of AMD-powered commercial PCs from our OEM partners. Looking forward, we believe the market is on track to return to annual growth in 2024, driven by the start of an enterprise refresh cycle and AI PC adoption. We see AI as the biggest inflection point in PCs since the internet, with the ability to deliver unprecedented productivity and usability gains. We're working very closely with Microsoft and a broad ecosystem of partners to enable the next generation of AI experiences powered by Ryzen processors, with more than 150 ISVs on track to be developing for AMD AI PCs by the end of the year. We will also take the next major step in our AI PC roadmap later this year with the launch of our next-generation Ryzen mobile processors, codenamed Strix. Customer interest in Strix is very high based on the significant performance and energy efficiency uplifts we are delivering. Design win momentum for premium notebooks is outpacing prior generations as Strix enables next-generation AI experiences in laptops that are thinner, lighter, and faster than ever before. We're excited about the growth opportunities for the PC market, and based on the strength of our Ryzen CPU portfolio, we expect to grow revenue share this year. Now turning to our gaming segment, revenue declined 48% year-over-year and 33% sequentially to $922 million. First quarter semi-custom SoC sales declined in line with our projections as we are now in the fifth year of the console cycle. In gaming graphics, revenue declined year-over-year and sequentially. We expanded our Radeon 7000 series family with the global launch of our Radeon RX 7900 GRE and also introduced our driver-based AMD Fluid Motion Frames technology that can provide large performance increases in thousands of games. Turning to our embedded segment, revenue decreased 46% year-over-year and 20% sequentially to $846 million, as customers remain focused on normalizing their inventory levels. We launched our Spartan UltraScale Plus FPGA family with high I/O counts, power efficiency, and state-of-the-art security features, and we're seeing a strong pipeline of growth for our cost-optimized embedded portfolio across multiple markets. Given the current embedded market conditions, we're now expecting second quarter embedded segment revenue to be flat sequentially, with a gradual recovery in the second half of the year. Longer term, we see AI at the edge as a large growth opportunity that will drive increased demand for compute across a wide range of devices. To address this demand, we announced our second generation of Versal adaptive SoCs that deliver a 3x increase in AI TOPS per watt and a 10x greater scalar compute performance compared to our prior generation of industry-leading adaptive SoCs. Versal Gen 2 adaptive SoCs are the only solution that combine multiple compute engines to handle AI preprocessing, inferencing, and post-processing on a single chip, enabling customers to rapidly add highly performant and efficient AI capabilities to a broad range of products. We were pleased to be joined at our launch by Subaru, who announced they adopted Versal AI Edge Series Gen 2 devices to power the next generation of their EyeSight ADAS system. Embedded design win momentum remains very strong as customers adopt our full portfolio of FPGAs, CPUs, GPUs, and adaptive SoCs to address a larger portion of their compute needs. In summary, we executed well in the first quarter, setting us up to deliver strong annual revenue growth and expanded gross margin driven by growing adoption of our Instinct, EPYC, and Ryzen product portfolios. Our priorities for 2024 are very clear. Accelerate our data center growth by ramping Instinct GPU production and gaining share with our EPYC processors. Launch our next-generation Zen 5 PC and server processors that extend our leadership performance, and expand our adaptive computing portfolio with differentiated solutions. Looking further ahead, AI represents an unprecedented opportunity for AMD. While there has been significant growth in AI infrastructure buildouts, we are still in the very early stages of what we believe is going to be a period of sustained growth driven by an insatiable demand for both high-performance AI and general-purpose compute. We have expanded our investments across the company to capture this large growth opportunity, from rapidly expanding our AI software stack to accelerating our AI hardware roadmaps, increasing our go-to-market activities, and partnering closely with the largest AI companies to co-optimize solutions for their most important workloads. We are very excited about the trajectory of the business and the significant growth opportunities ahead. Now I'd like to turn the call over to Jean to provide some additional color on our first quarter results. Jean?
Thank you, Lisa, and good afternoon, everyone. I'll start with a review of our financial results and then provide our current outlook for the second quarter of fiscal 2024. We delivered a strong year-over-year revenue growth in our data center and client segments in the first quarter and drew 230 basis points of gross margin expansion. For the first quarter of 2024, revenue was $5.5 billion, up 2% year-over-year, as revenue growth in the data center and the client segment was partially offset by lower revenue in our gaming and embedded segments. Revenue declined 11% sequentially as higher data center revenue resulting from the ramp of our AMD Instinct GPUs was offset by lower gaming and embedded segment revenues. Gross margin was 52%, up 230 basis points year-over-year, driven by higher revenue contribution from the data center and the client segment, partially offset by lower embedded and the gaming segment revenue contribution. Operating expenses were $1.7 billion, an increase of 10% year-over-year, as we continued investing aggressively in R&D and marketing activities to address the significant AI growth opportunities ahead of us. Operating income was $1.1 billion, representing a 21% operating margin. Taxes, interest expense, and other was $120 million. For the fourth quarter of 2024, diluted earnings per share was 62 cents, an increase of 3% year-over-year. Now turning to our reportable segments, starting with the data center. Data center delivered record quarterly segment revenue of $2.3 billion, up 80%, a $1 billion increase year-over-year. Data center accounted for more than 40% of total revenue, primarily led by the ramp of AMD Instinct GPUs from both cloud and enterprise customers, and strong double-digit percentage growth in our server processor revenue as a result of growth across our Zen 4 products. On a sequential basis, revenue increased 2%, driven by the ramp of our AMD Instinct GPUs, partially offset by seasonal decline in server CPU sales. Data center segment operating income was $541 million, or 23% of revenue, compared to $148 million, or 11% a year ago. Operating income was up 266% year-over-year due to operating leverage, even as we significantly increased our investment in R&D. Client segment revenue was $1.4 billion, up 85% year-over-year, driven primarily by Ryzen 8000 series processors. On a sequential basis, client revenue declined 6%. Client segment operating income was $86 million, or 6% of revenue, compared to an operating loss of $172 million a year ago, driven by higher revenue. Gaming segment revenue was $922 million, down 48% year-over-year and down 33% sequentially due to a decrease in semi-custom and Radeon GPU sales. Gaming segment operating income was $151 million, or 16% of revenue, compared to $314 million, or 18% a year ago. Embedded segment revenue was $846 million, down 46% year-over-year, 20% sequentially, as customers continue to manage their inventory levels. Embedded segment operating income was $342 million, or 41% of revenue, compared to $798 million, or 51% a year ago. Turning to the balance sheet and the cash flow, during the quarter, we generated $521 million in cash from operations, and the free cash flow was $379 million. Inventory increased sequentially by $301 million to $4.7 billion, primarily to support the continued ramp of data center and client products in advanced process nodes. At the end of the quarter, cash equivalents, and short-term investment was $6 billion. As a reminder, we have $750 million of debt maturing this June. Given our ample liquidity, we plan to retire the debt utilizing existing cash. Now turning to our second quarter 2024 outlook. We expect revenue to be approximately $5.7 billion ± $300 million. Sequentially, we expect data center segment revenue to increase by double-digit percentage, primarily driven by the data center GPU ramp. Client segment revenue to increase, embedded segment revenue to be flat. And in the gaming segment, based on current demand signals, revenue to decline by significant double-digit percentage. Year-over-year, we expect our data center and client segment revenue to be up significantly, driven by the strength of our product portfolio. The embedded and the gaming segment revenue to decline by a significant double-digit percentage. In addition, we expect second quarter non-GAAP gross margin to be approximately 53%. Non-GAAP operating expenses to be approximately $1.8 billion. Non-GAAP effective tax rate to be 13%, and the diluted share count is expected to be approximately 1.64 billion shares. In closing, we started the year strong. We made significant progress on our strategic priorities, delivered year-over-year revenue growth in our data center and the client segment, and expanded the gross margin. Looking ahead, we believe the investment we are making will position us very well to address the large AI opportunities ahead. With that, I'll turn it back to Mitch for the Q&A session.
Thank you, Jean. Paul, we're happy to poll the audience for questions.
Thank you. We'll now be conducting a question and answer session. If you'd like to ask a question, please press star one on your telephone keypad. A confirmation tone will indicate your line is in the question queue. You may press star two if you'd like to remove your question from the queue. For participants using speaker equipment, it may be necessary to pick up your handset before pressing the star keys. One moment please while we poll for questions. Thank you. Our first question is from Toshiya Hari with Goldman Sachs. Please proceed with your question.
Hi, thank you so much for taking the question. Lisa, my first question is on the MI300. You're taking up the full year outlook from $3.5 to $4 billion. I'm curious what's driving that incremental $500 million in revenue. Is it new customers? Is it additional, bookings from existing customers? Is it more cloud? Is it more enterprise? If you can sort of, provide color there, that would be helpful. And then on the supply side, there's been headlines or chatter that, CoWoS and/or HBM could be a pretty severe constraining factor for you guys. If you can speak to how you're handling the supply side of the equation, that would be helpful too. And then I have a quick follow-up.
Great. Thank you, Toshiya, for the question. Look, the MI300 ramp is going really well. If we look at just what's happened over the last 90 days, we've been working very closely with our customers to qualify MI300 in their production data centers, both from a hardware standpoint, software standpoint. So far things are going quite well, and what we see now is just greater visibility to both current customers as well as new customers committing to MI300. So that gives us the confidence to go from $3.5 to $4 billion. And I view this as very much, it's a very dynamic market, and there are lots of customers. We said on in the prepared remarks that we have over 100 customers that we're engaged with in both development as well as deployment. So overall the ramp is going really well. As it relates to the supply chain, actually I would say I'm very pleased with how supply has ramped. It is absolutely the fastest product ramp that we have done. It's a very complex product, chiplets, CoWoS, 3D integration, HBM, and so far it's gone extremely well. We've gotten great support from our partners, and so I would say even in the quarter that we just finished, we actually did a little bit better than expected when we first started the quarter. I think Q2 will be another significant ramp, and we're going to ramp supply every quarter this year. So I think the supply chain is going well. We are tight on supply, so there's no question in the near term that if we had more supply, we have demand for that product. And we're going to continue to work on those elements as we go through the year. But I think both on the demand side and the supply side, I'm very pleased with how the ramp is going.
Thank you for all the details. And then as my follow-up, I was hoping you could speak to your data center GPU roadmap beyond the MI300. The other, concern that we hear is, your nearest competitor has been pretty transparent with their roadmap, and that extends into 25 and oftentimes 26. So maybe this isn't the right venue for you to give too much. But beyond the MI300, how should we think about your roadmap and your ability to compete in data center? Thank you.
Yeah, sure. So look, Toshiya, when we start with the roadmap, I mean, we always think about it as a multi-year, multi-generational roadmap. So we have, the follow-ons to MI300 as well as the next generations, well in development. I think what is true is we're getting much closer to our top AI customers. They're actually giving us significant feedback on the roadmap and what we need to meet their needs. Our chiplet architecture is actually very flexible, and so that allows us to actually make changes to the roadmap as necessary. So we're very confident in our ability to continue to be very competitive. Frankly, I think we're going to get more competitive. Right now, I think MI300X is in a sweet spot for inference, very, very strong inference performance. I see as we bring in additional products, later this year into 2025, that will continue to be a strong spot for us. And then we're also enhancing our training performance and our software roadmap to go along with it. So more details to come in the coming months, but we have a strong roadmap that goes through the next couple of years, and it is informed by just a lot of learning in working with our top customers.
Appreciate it. Thank you.
Sure.
Our next question is from Ross Seymour with Deutsche Bank. Please proceed with your question.
Hi, thanks for letting me ask a question. The non-AI side of the data center business, it sounds like the enterprise side has some good traction, even though the sequential drop happened seasonally, Lisa. But I was just wondering, what's implied in your second quarter guidance for the data center CPU side of things? And generally speaking, how are you seeing that whole kind of GPU versus CPU crowding out dynamic playing out for the rest of 2024?
Yeah, sure. Ross, thanks for the question. I think our EPYC business has actually performed pretty well. The market is a bit mixed. I think some of the cloud guys are still, working through, sort of their optimizations. I think it's different by customer. We did see here in the first quarter actually some very, nice early signs in the enterprise space, sort of large customers starting refresh programs. The value proposition of Genoa is very, very strong, and we're seeing that pull through across the enterprise. In the second quarter, we expect overall data center to be up, strong double digits, and then within that, we expect server to be up as well. And as we go into the second half of the year, I think there are a couple of drivers for us. We do expect some improvement in the overall market conditions for the server business, but we also have our Turin launch in the second half of the year that will also, we believe, extend our leadership position within the server market. So, overall, I think the business is performing well, and we believe that we're continuing to be very well positioned to gain share throughout the year.
Thanks for that. And I guess as my follow-up, just switching over to the client side, I noted you guided it up sequentially. Any sort of magnitudes around that for the second quarter? And perhaps more importantly, when you talk about the whole AI PC side of things, do you believe that's more of a unit driver for you, an ASP driver, or will it be both?
Yeah. So I think, again, I think we're pretty excited about the AI PC, both opportunity in, let's call it the near term and even more so in the medium term. I think the client business is performing well, both on the channel and on the MNC side. We expect client to be up sequentially in the second quarter. And as we go into the second half of the year, to your question about units, versus ASPs, I think we expect some increase in units as well as ASPs. The AI PC products, when we look at the Strix products, they're really well suited for the premium segments of the market, and I think that's where you're going to see some of the AI PC content strongest in the beginning, and then as we go into 2025, you would see it more across the rest of the portfolio.
Thank you.
Thanks, Ross.
Thank you. Our next question is from Matt Ramsay with TD Cowen. Please proceed with your question.
Yes, thank you very much. Good afternoon, everybody. Lisa, I have sort of a longer-term question and then a shorter-term follow-up one. I guess one of the questions that I've been getting from folks a lot is obviously your primary competitor has announced, I guess, a multi-year roadmap, and we continue to hear more and more from other folks about internal ASIC programs at some of your primary customers, whether they be for inference or training or both. I guess it would be really helpful if you could talk to us about how your conversations go with those customers, how committed they are to your long-term roadmap, multi-generation as you described it, how they juxtapose doing investments of their internal silicon versus using a merchant supplier like yourselves, and maybe what advantages the experience across a large footprint of customers can give your company that those guys doing internal ASICs might not get. Thanks.
Yeah, sure, Matt. Thanks for the question. So look, I think one of the things that we see and we've said is that the TAM for AI compute is growing extremely quickly, and we see that continuing to be the case in all conversations. We had highlighted a TAM of, let's call it $400 billion in 2027. I think some people thought that was aggressive at the time, but the overall AI compute needs, as we talk to customers, is very, very strong, and you've seen that in some of the announcements, even recently with some of the largest cloud guys. From my view, there are several aspects of it. First of all, we have great relationships with all of sort of the top AI companies, and the idea there is we want to innovate together. When you look at these large language models and everything that you need for training and inferencing, although there will be many solutions, I don't think there's just one solution that will fit all. The GPU is still the preferred architecture, especially as the algorithms and the models are continuing to evolve over time, and that favors our architecture and also our ability to really optimize CPU with GPU. So from my standpoint, I think we're very happy with the partnerships that we have. I think this is a huge opportunity for all of us to really innovate together, and we see that there's a very strong commitment to working together over multiple years going forward, and that's I think a testament to some of the work that we've done in the past, and that very much is what happened with the EPYC roadmap as well.
No, appreciate that, Lisa. As my follow-up, a little bit shorter term, and I guess having followed the company super closely for a long time, I think there's always been noise in the system from whether the stock price is $2 a share or 200. There's been kind of always consistent noise one way or the other, but the last month and a half has been extreme in that sense. And so I wanted to I've got random reports in my inbox about changes in demand from some of your MI300 customers or planned demand for consuming your product. I think you answered earlier about the supply situation and how you're working with your partners there, but has there been any change from the customers that you're in ramp with now or that you soon will be of what their intention is for demand, or in fact has that maybe strengthened rather than gone down in recent periods? Because I keep getting questions about it. Thanks.
Sure, Matt. Look, I think I might have said it earlier, but maybe I'll repeat it again. I think the demand side is actually really strong, and what we see with our customers and what we are tracking very closely is customers moving from, let's call it, initial POCs to pilots to full-scale production to deployment across multiple workloads. And we're moving through that sequence very well. I feel very good about the deployments and ramps that we have ongoing right now. And I also feel very good about, new customers who are, sort of earlier on in that process. So from a demand standpoint, we continue to build backlog as well as build engagements going forward. And similarly, on the supply standpoint, we're continuing to build supply momentum. But from a speed of ramp standpoint, I'm actually, really pleased with the progress.
All right. Thank you very much.
Thank you. Our next question is from Aaron Rakers with Wells Fargo. Please proceed with your question.
Yeah, thanks for taking a question, and I apologize if if I missed this earlier, but I know last quarter you talked about having a securing enough capacity to support significant upside to the ramp of the MI300. I know that you upped your guide now to $4 billion. I'm curious of how you would characterize the supply relative to that context offered last quarter as we think about that new kind of target of 4. Would you characterize it as still having supply capacity upside potential? Thank you.
Yes, Aaron. So, we've said before that, our goal is to ensure that we have supply that exceeds the current, guidance, and that is true. So as we've upped our guidance from $3.5 to $4 billion, we have, supply visibility, significantly beyond that.
Yep. Okay. Thank you. And then as a quick follow-up, going back to an earlier question on server demand, more traditional server, as you see, the ramp of maybe share opportunities in more traditional enterprise, I'm curious how you would characterize the growth that you expect to see in more traditional server CPU market as we move through 24 or even longer term. How you characterize that growth trend?
Yeah, I think, Aaron, what I would say is there are, the need for refresh of, let's call it, older equipment is certainly there. So we see a refresh cycle coming. We also see, AI head nodes as another place where we see growth in, let's call it, the more traditional CPU market. Our sweet spot is really in the, highest performance, sort of high core count, energy efficiency space, and that is playing out well. And, we're also, we've traditionally been very strong in, let's call it, cloud first-party workloads, and that is now extending to cloud third-party workloads where, we see enterprises who are, let's call it, in more of a hybrid environment, adopting AMD both, in the cloud and on-prem. So I think overall we see it as, a continued, good progression for us with the server business going through 2024 and beyond.
Yep. Thank you.
Thanks.
Thank you. Our next question is from Vivek Arya with Bank of America Securities. Please proceed with your question.
Thanks for taking my question. Lisa, I just wanted to go back to the supply question and the $4 billion outlook for this year. I think at some point there was a suggestion that the $4 billion number, right, that there are still supply constraints, but I think at a different point you said that you have supply visibility significantly beyond that. Given that we are almost at the middle of the year, I would have thought that you would have much better visibility about the back half. So is the $4 billion number a supply constrained number, or is it a demand constrained number? Or, alternatively, if you could give us some sense of what the exit rate of your GPU sales could be. I think on the last call, $1.5 billion was suggested. Could it be a lot more than that in terms of your exit rate of MI for this year?
Yeah, Vivek, let me try to make sure that we answered this question clearly. From a full year standpoint, our $4 billion number is not supply capped. I'm sorry, yes, it's not supply capped. It is, we do have supply capability above that. It is more back half weighted. So if you're looking at sort of the near term, I would say, for example, in the second quarter, we do have more demand than we have supply right now, and we're continuing to work on pulling in some of that supply. By the way, I think this is an overall industry issue. This is not at all, related to AMD. I think overall AI demand has exceeded anyone's expectations in 2024. So you've heard it from the memory guys, you've heard it from the foundry guys. We're all ramping capacity as we go through the year. And as it relates to visibility, we do have good visibility into what's happening. As I said, we have great customer engagements that are going forward. My goal is to make sure that we pass all of the milestones as we're ramping products, and as we pass those milestones, we put that into the overall full year guidance for AI. But in terms of how customer progression things are going, they're actually going quite well. And we continue to bring new customers on, and we continue to expand workloads with our current customers. And so hopefully that clarifies the question, Vivek.
Thank you, Lisa. Maybe one not on MI, but maybe on the embedded business. I think you sound a bit more measured about Q2 and the second half rebound, which is similar to what we have heard from a lot of the auto industrial peers. But where are you in the inventory clearing cycle? And if embedded has a somewhat more measured rebound in the back half, what implication does that have on a gross margin expansion? Can we continue to expect, 100 basis points a quarter in terms of gross margin expansion because of the data center mix, or just any puts and takes of embedded and then what it means for gross margins in the back half? Thank you.
Hi, Vivek. Thank you for the question. I think embedded business declined a little bit more than expected, really due to the weaker demand in some of the markets. Very specifically, communication has been weak, and some pockets of industrial and automotive, as you mentioned, it's actually quite consistent with the peers. Second half, we do think the first half is the bottom of embedded business, and we'll start to see gradual recovery in the second half. And going back to your gross margin question is when you look at our gross margin expansion in both Q1 and the guided Q2, the primary driver is the strong performance on the data center side. The data center will continue to ramp in second half. I think that will continue to be the major driver of gross margin expansion in second half. Of course, if embedded is doing better, we'll have a more tailwind in second half.
Thank you.
Thank you. Our next question is from Timothy Arcuri with UBS. Please proceed with your question.
Thanks very much. I also wanted to ask about your data center GPU roadmap. The customers that we talk to say that they're engaged not just because of MI300, but really because of what's coming. And it seems like there's a big demand shift to rack scale systems that try to optimize performance per square foot, given some of the data center and power constraints. So can you just talk about how important systems are going to be in your roadmap, and do you have all the pieces you need as the market shifts to rack scale systems?
Yeah, sure, Timothy. Thanks for the question. For sure, look, our customers are engaged in the multi-generational conversation. So, we've definitely going out over the next couple of years. And as it relates to the overall system integration, it is quite important. It is something that we're working very closely with our customers and partners on. That's a significant investment in networking, working with a number of networking partners as well to make sure that the scale out capability is there. And to your question of do we have the pieces, we do absolutely have the pieces. I think the work that we've always done with our Infinity Fabric, as well as with our Pensando acquisition, that's brought in a lot of networking expertise. And then we're working across the networking ecosystem with key partners like Broadcom and Cisco and Arista, who are with us at our AI data center event in December. So our work right now in future generations is not just specifying a GPU. It is specifying, let's call it, full system reference designs, and that's something that will be quite important going forward.
Thanks a lot. And then just as a quick follow-up, I know this year looks like it's going to be pretty back half loaded in your server CPU business, just like it was last year. And I know you kind of held our hands at about this time last year, sort of on what the full year could look like and how back end loaded it could be. So I kind of wonder, could you give us some milestones in terms of how much server CPU could grow this year, how back end loaded it could be? Is like up 30% this year for your server CPU business, year over year? Is that a reasonable bogey? I just wonder if you can kind of give us any guidance on that piece of the business. Thanks.
Yeah, I mean, I think, Tim, I think the best way to say it is our data center segment is on a very, very strong ramp as we go through the back half of the year. You know, server CPUs, certainly, you know, data center GPUs, you know, for sure. So, you know, I don't know that we're gonna get into specifics, but I could say, you know, in general, you should expect overall at the segment level to be, you know, very strong double digits.
Thank you, Lisa.
Thank you.
Thank you. Our next question is from Joe Moore with Morgan Stanley. Please proceed with your question.
Great. Thank you. I wonder if you could address the profitability of MI300. I know you said a couple quarters ago that it would eventually be above corporate average, but it would take you a few quarters to get there. Can you talk about where you are in that?
Yeah. Thank you, Joe. Our team has done an incredible job to ramp MI300. As you probably know, it's a very complex product, and we are still at the first year of the ramp, both from you know, yield testing time and the process improvement. Those things are still ongoing. We do think over time, the gross margin should be accretive to corporate average.
Great. Thank you. And then, a separate follow-up on the Turin transition on server. I know when you had transitioned into Genoa, you said it could take a little while, that there were significant platform shifts and things like that. Turin seems to be much more kind of ecosystem compatible. How quickly do you think you might see that product ramp within your server portfolio?
Yeah, Joe, I think from what we see, look, I think Turin is the same platform, so that does make it an easier ramp. I do think that Genoa and Turin will coexist for some amount of time because customers are deciding when they're gonna bring out, you know, their new platforms. We expect Turin to give us access to a broader set of workloads, so our SAM actually expands with Turin both in enterprise and cloud. And, you know, from our experience, I think you'll see a faster transition than, for example, when we went from, you know, Milan to Genoa.
Great. Thank you.
Thank you. Our next question is from Stacy Rasgon with Bernstein Research. Please proceed with your question.
Hi, guys. Thanks for taking my questions. For my first one, I wanted to address the MI300 ramp into Q2. So you said you've done $1 billion, give or take, in cumulative sales, which puts it at maybe, I don't know, maybe $600 million in Q1. You're guiding total revenues up about $225 million into Q2, but you've got client up, you've got traditional data center up, you've got embedded flat. Gaming's gonna be down, but I'd hazard a guess that the client and traditional data center, like, offset it, if not more. Does the MI300 ramp into Q2, is it more or less than the total corporate ramp that you've got built into guidance right now? That you're expecting?
Hi, Stacy. Thanks for the question. You always ask a math question. So I think in general, it is more the data center GPU ramp. It will be more than the overall company's 200-some million ramp.
Okay, so that means gaming must be down, like, a lot, right? If client and traditional data center also goes up. Okay.
Yeah, you're right. The gaming is down similar zip code like a Q1.
Got it. That's helpful.
So maybe let me give you some color about the gaming business, right?
Yeah.
It's, you know, if you look at the gaming, the demand has been quite weak. That's quite very well known, and also their inventory level. So based on the visibility we have, the first half, you know, both Q1, Q2, we guided down sequentially more than 30%. We actually think the second half will be lower than first half. That's basically how we're looking at this year for the gaming business. And at the same time, gaming's gross margin is lower than our company average. So overall, you know, will help the mix on the gross margin side. That's just some color on the gaming side. But you're right, Q2 gaming is down a lot.
Got it. That's helpful. Thank you. For my second question, I wanted to look at the near-term data center profitability. So operating profit was down 19% sequentially on 2% revenue growth. Is that just the margins of the GPUs filtering in relative to the CPUs? And I know you said GPUs would eventually be above corporate average. are they below the CPU average I mean, they clearly are, I guess, in the near term, but are they going to stay that way?
Yeah, I think you're right. Is the GPU gross margin right now is below the data center gross margin level. I think there are two reasons. Actually, the major reason is we actually increased the investment quite significantly to, as Lisa mentioned, to expand and accelerating our roadmap in the AI side. That's one of the major drivers of the operating income coming down slightly. On the gross margin side, going back to your question, is we said in the past, and we continue to believe the case, is data center GPU gross margin over time will be accretive to corporate average, but it will take a while to get to the server level of gross margin.
Got it. That's helpful. Thank you.
Thank you. Our next question is from Harlan Sur with J.P. Morgan. Please proceed with your question.
Hey, good afternoon. Thanks for taking my question. On your data center GPU segment and the faster time to production shipments, given you just upped your full year GPU outlook, how much of it is faster bring up of your customers' frameworks driven by your latest ROCm software platform and maybe stronger collaboration with your customers' engineers just to get them to qual faster? And how much of it is just a more aggressive build-out plan by customers versus their prior expectations, given what appears to be pretty strong urgency for them to move forward with their important AI initiatives?
Yeah, Harlan, thank you for the question. What it really is both us and our customers feeling confident in broadening the ramp. Because if you think about it, first of all, the ROCm stack has done really well. And the work that we're doing is hand in hand with our customers to optimize their key models. And it was important to get sort of verification and validation that everything would run well, and we've now passed some important milestones in that area. And then I think the other thing is, as you said, there's a huge demand for more AI compute, and so our ability to participate in that and help customers get that up and running is great. So I think overall, as we look at it, this ramp has been very, very aggressive. If you think about where we were just a quarter ago, each of these are pretty complex bring ups, and I'm very happy with how they've gone. And by the way, we're only sitting here in April, so there's still a lot of 2024 to go, and there's a great customer momentum in the process.
Yep. Yeah, absolutely. Just going back, just kind of rewinding back to the March quarter. So similar to the PC client business, right, which declined at the low end of the seasonal range. If I make certain assumptions around your data center GPU business, I X that out of data center, it looks like your server CPU business was also down at the lower end of the seasonal range. By my math, it was down like 5-6% sequentially. Is that right? And that's less than half the decline of your competitor. And if so, like, what drove the less than seasonal declines? I assume some of it was share gain. Sounds like enterprise was also better. Looks like you guys did drive a little bit more cloud instance adoption, but anything else that drove the slightly better seasonal pattern in March for data center server?
Yeah, Harlan, this is Jean. I think the server business has been performing really well. Year over year, it actually increased a very strong double digit. I think sequentially it is more seasonal, but we feel pretty good about continue gaining share there.
Yeah, and if I just add, Harlan, to your question, we did see strength in enterprise in the first quarter, and I think that has that offset perhaps some of the normal seasonality.
Yeah.
Oh, we have time for two more questions.
Thank you. Our next question is from Tom O'Malley with Barclays. Please proceed with your question.
Hey, thanks for taking my question. I just wanted to ask on the competitive environment. Obviously, on the CPU side, you had a competitor talk about launching a high core count product in the coming quarter, kind of ramping now and more so into Q3. You've seen really good pricing tailwinds as a function of the higher core count, but can you talk about what you're seeing in that market? Do you think that there's any risk for more aggressive pricing, which would impact your ASP ramp for the rest of the year?
Yeah, when we look at our server CPU sort of ASPs, they're actually very stable. I think we tend to be indexed towards the higher core counts. Overall, I would say the pricing environment is stable. This is about sort of TCO for sort of the customer environments and sort of our performance and our performance per watt, our leadership, and that usually translates into TCO advantage for our customers.
Helpful. And then just a broader question to follow up here. So I think it got asked earlier about the importance of systems, but on your end, how important is the Open Ethernet Consortium to you being able to move more into systems? I know that today you obviously have some internal assets and then you can partner with others, but is there a way that you could be competitive before there is an industry standard on the Ethernet side? And can you talk about when you think the timing of that kind of consortium comes to market and enables you to maybe accelerate that roadmap? Thanks a lot.
Yeah, I think it's very important to say we are very supportive of the open ecosystem. We're very supportive of the Ultra Ethernet Consortium, but I don't believe that is a limiter to our ability to build large scale systems. I think Ethernet is something that many in the industry feel will be the long-term answer for networking in these systems, and we have a lot of work that we're doing with internally as well as with our customers and partners to enable that.
Thank you.
We're ready for our final question.
Our last question is from Harsh Kumar with Piper Sandler. Please proceed with your question.
Yeah, hey, thank you for letting me ask a question. Lisa, I had two. One is for you and one perhaps for Jean. So we recently hosted a very large custom GPU company for a call, and they talked about kind of mega data centers coming up in the near to midterm, talking about nodes potentially in the 100,000 plus range, maybe up to 1 million. So as we look out at these kinds of data centers from an architectural standpoint, is that a situation where winner takes all, where if somebody gets in, they kind of get all the sockets, or will there be lines where your chip perhaps or your board can be placed right next to somebody else's board, maybe on a separate line? Just help us understand how something like that would play out if there's a chance for more than one competitor to play in such a large data center.
Yeah. So, I'll talk maybe a little bit more at the strategic level. I think as we look at, sort of how AI shapes up over the next few years, there are, customers who would be looking at very large, training environments, and perhaps that's what you're talking about. I think, our view of that is, number one, we view that as a very attractive area for AMD. It's an area where, we believe we have the technology to be very competitive there. And, I think the desire would be to, have optionality in terms of how you build those out. So, obviously a lot has to happen between here and there. But I think your overarching question of, is it winner takes all? I don't think so. That being the case, we believe that, AMD is very well positioned to play in those, let's call it very large scale systems.
Wonderful. Thank you. And then maybe a quick one for Jean. So Jean, I put everything into the model that you talked about for June. I get about a more or less a $400 million rise in the June quarter over March. You mentioned that both MI300 and EPYC will grow. Curious if you could help us think about the relative sizing of those two segments within the growth. The point I'm trying to make is I'm getting roughly about a $900 million number for MI300 for June. Am I in the ballpark or am I way off here?
Harsh, we're not going to guide a specific segment below the segment revenue. I think the most important thing is we did say data center is going to grow double digit sequentially. I will leave it over there. Sub-segment, there are a lot of details.
Fair enough. I had to try. Thank you, guys. Thank you so much.
Yeah. Thank you.
Thank you. There are no further questions at this time. I'd like to hand the floor back over to management for any closing comments.
Great. That concludes today's call. Thanks to all of you for joining us today.
Great.
This concludes today's conference. You may disconnect your lines at this time. Thank you for your participation.
Hey, sorry about that. I was just shuffling things around. But yeah, that was their earnings call. It does look like we have gotten confirmation above this level. So the high here for this candle was $146.20. And we got a close above that here. So, I do think that the price could be moving up to test this downtrend here that I drew based on the, pivot low here, connection here, and then pivot high here. So yeah, pretty interesting. Will be interesting to see how AMD opens up in the morning. Currently down about 7.5% in the after hours. MU down about 2%, NVIDIA down a little over 2%, and SMCI down over 12.5%. So AMD not looking so bad relative to SMCI. And generally, SMH, that is the ETF that tracks semiconductors, as well as SOXX, those are both down between 1 and 1.5% in the after hours. So, it'll be interesting to see where all these open up in the morning. And since I did cover a lot of the price action before the earnings call, right after the closing bell, I've been doing this for over 2 hours now. So I'm probably going to sign off here in just a minute because I do want to get out a NEO video tonight. For my own personal interest, that video also does seem to perform well, that ticker. So I want to get a video out on them. And then also do an update on the cannabis sector stocks that I have been covering, which includes Tilray, SNDL, CGC, Canopy Growth Corporation, which is up massively today, and then as well as MSOS and MSOX, which are two cannabis ETFs. So yeah, with that being said, I'm going to throw this up here. If you did enjoy the stream, make sure you like it, share your thoughts, whether in the live chat or in the comments. Always happy to take them. And make sure you subscribe to the channel. I do live streams for earnings calls when I can, and I stream every Sunday at 9 p.m. Eastern doing ticker requests live, where I'm happy to take your requests, whatever tickers you want, go over them, technical analysis, and, just think about what's going on. And if you doubt technical analysis, you can see it right here on the chart. If you think technical analysis is not worth the time, I do think I did call this, retrace to the scene of the crime, and did wait for, confirmation, which we've seen. And so hopefully price is able to go higher, might be bumping into some resistance around 147, 148, where we do have the lows here. Can throw up the volume profile, and that is reflected in that consolidation there. Buyers, sellers, and that is going to create kind of a wall for price to get above, because there might be some people who bought here who want to offload shares with concern that it might be going even lower. But yeah, we'll have to see. And if you do want to see a follow-up on AMD or any of the semiconductor stocks, let me know in the comments down below. Always happy to follow up as long as videos perform well and people want to see them. So, always let me know, and I always try to respond to those comments. But yeah, I am going to take a little bit of a break, go get some groceries, and then do the NEO video and then the cannabis sector stocks this evening. I'll get both of those out tonight. But yeah, thank you so much for joining, and I'll see you in the next one. Take care, you guys.